can use this one. Yeah. All right. Good morning, everyone. Thanks for coming. We got a full house here, so that's good. So today presenting is PJ DiNuzzo and his son Mike DiNuzzo, and they run DiNuzzo Index Advisors in Beaver. PJ founded DiNuzzo Index Advisors in 1989 and grew the firm from 0 assets to over 500 million assets under management. DiNuzzo Index Advisors is Pittsburgh's largest and oldest fee-only pure DFA index registered investment advisory firm. Among his many degrees and certifications, PJ actually received his Master's of Science in Tax Law from Robert Morris University, so he's an alum. PJ has devoted his entire professional career to indexing and efficient market theory, retirement planning, and educating the public regarding their benefits. Mike DiNuzzo joined DIA in 2007 as an intern, and he is now currently a wealth advisor and a vice president. Mike received his BA from Duquesne and is currently working towards his master's from Bentley University. His objective was to join a firm that uses a team approach in making recommendations for what is the best interest for his clients. Mike firmly believes that investment philosophy, world-class research, disciplined asset allocation models, and fiduciary responsibility are necessary for a successful client relationship. Both PJ and Mike have been awarded the prestigious multi-year designation as a 5-star wealth manager. This award is given to wealth managers across the U.S. who satisfy key client criteria and score the highest in overall client satisfaction. Today, they will be speaking about the different pathways in the field of personal finance. They will take questions at the end of the presentation. Hand it off to PJ.
Yeah, thank you very much. Yeah, well, Mike and I were discussing today, we were initially thinking that I would just present by myself, but I think it's going to be a great perspective. Myself, I founded the firm, as Leslie had said, with $0 and grew it over the years. We've grown to 21 team members, approximately $500 million in assets under management. And then Mike, I think I'll present for about 20 minutes, and then Mike will present for about 20 minutes. He'll be able to give you a good perspective because he was sitting out in the audience where all of you are right now about 10 years ago. So I think that'll be a very good perspective from him as well. And then at the end, we'll have a question and answer period, and we really welcome, the more questions you have, please fire away. That's what we're here for, to help you in your careers, maybe give you a little bit of guidance today, point you in the right direction, and then we'll be milling about afterwards if you have any questions as well. Leslie, giving the background. One other plug for Robert Morris. I also, during my career change, came back to Robert Morris, and I went through the CPA, the accounting certificate, after I already had my undergraduate degree, since I had not majored in accounting. So I thank Robert Morris. I was able to get my 30 or 30-some accounting credits here over a few-year period of time on evenings and weekends, and which I credit with helping me pass my CPA exam. So I'm very grateful to the university here. And again, Leslie had given our backgrounds. We had basically titled it Deciding on a Career in Personal Financial Services, and I think Mike will be able to give you a better idea, I think, from a wide genre. We're both optimists, but we think that there's a space for someone along the entire continuum in the field that we work in. If you're an extrovert, there's certainly positions that are more, you would gravitate more towards more of a sales position. If you're really strong quantitatively, you don't really interact that much. There's no shortage of back office quantitative, number crunching, et cetera, positions that are involved in our field. And again, as I mentioned, basically looking at it from the president, myself, and again, I was sitting where you were, close to 30 years ago, but I'm a little bit more removed, and Mike will be able to give you some real good ideas. And what I wanted to say first was, we're thinking about going along a career path, but what we see very frequently is if you were going to enter into a field in personal finance, you really sort of need to get your own personal financial house in order first. And I thought this was very important to be able to give advice to others, getting your own personal financial house in order. So, we'd recommend this to you coming out of school. I know you've got a lot of moving parts. You're coming around the bend. You're going to be graduating shortly. But we would recommend once you get out of school, you have to have some peace of mind. So to set up for yourself an emergency fund. And if you simply sat down and said, my bills are $2,000 a month, you at least want to try to get a month or two, ideally 3 months, in a perfect world at least 6. But you want to give yourself a little bit of cushioning, because what you'll find out is you're going through the interview process, you're talking to firms, you're being interviewed, even when you get into the work, into your career, or hopefully on your career path, you're not going to be able to make really good financial decisions yourself on which company you want to work for. I'm thinking about buying a car versus leasing a car. What about renting this place? What about going with somebody else? If you yourself are under personal financial duress, you're just really not going to be able to make optimal financial decisions. The second one is to pay off debt and develop a strategy for long-term debt amortization. I'm not patronizing the crowd, but I've been very well pleased. Anytime I've talked to the students here at Robert Morris University, both when I was attending the university and anytime I come back and I talk to anyone, really have a really more mature audience. You know what you want to do a lot better than other undergrads, et cetera. But getting your nominal debt paid off, like your credit cards, et cetera, and then just focusing on amortizing your student loans over time, but to really get a plan for that and not let that get ahead of you. And then the third one, once you've established some type of emergency fund, you're getting on a schedule to pay off your own debt, both short-term and long-term, would be to pay yourself first. Basically, we specialize in retirement income planning, and as Leslie mentioned, index investment management. But even once you first get into the workforce, you may not like to think of it or not, but you're really starting to prepare for your retirement plan. We've switched from, a lot of you wouldn't even recognize it, what's called a defined benefit plan, which is a pension, if you've heard the word pension, pretty much predominantly to a defined contribution plan, where you are, each individual woman and man in this audience, you are your own retirement plan. When you look in the mirror, that's your retirement plan. You're looking at it. So you really want to get in the habit of paying yourself first. Once you get into the workforce, it's really easy to procrastinate. Oh, I've got this going on, I've got that going on. But what you'll find, if you pay yourself first, you develop good financial habits, and it's going to pay off in the long run. Very simply, we try to simplify what we do for a living as much as possible. If the average retirement is for 30 years, then you need to save for 30 years going into retirement. You need to save approximately 15% a year for 30 years to be able to have enough money for the 30 years of retirement to take the money out of that portfolio to maintain your lifestyle. So if you save in less than 15%, you might have to work for 37 years, 40 years, whatever have you. May have to, may have to work a lot longer. So these are really the three keys. Establish your emergency fund for yourself, paying off debt, and develop a strategy to pay off the long-term debt as well, short-term first, and to get on a strategy for the long-term. And again, always pay yourself first. You can't spend every penny of every dollar that you have. You have to find a way to live within your means. You'll live a lot happier, more successful life. Then the big picture for what we do, we're on what's called the SEC side of things, getting into our business down to the real world. As Leslie said, we have a home office in Beaver, Pennsylvania. We have a satellite office in Squirrel Hill, Pennsylvania. We're on the SEC side of things. There's a fiduciary versus a commission side. We were one of the first 300 firms in the United States that was set up as a fee-only practice. And these are things that may sound Greek to you now, but when you start to go out in the workforce, a lot of these will, and Mike's going to offer himself, even if you have a question in the future, if you want to send him an email or something, because he's a lot more up on this than I am, he's just gone through it. But if you have a question, company A versus company B, or more or less like the position, if you need any help with your career, we're here to help you. Again, we're an SEC registered investment advisory firm. It's fee only. We don't have any conflict of interest. We don't get paid any more for selling someone a chair versus a table versus a glass. There's no conflict on that front. It's all flat fee. And then the last thing you'd want to see, and Mike will get into the career positions a little bit more, but a planning-centric firm. So we lead first with financial planning. Investments, as maybe some of you are familiar with, are sort of like the shiny object that distracts a lot of people. But planning is what we lead with, of course, investments, retirement planning, and all types of planning, financial, intergenerational, et cetera, tax planning, and estate planning. So really, you need to have all four rooms of what we call your personal financial house in order. Now, a lot of these don't mean a whole lot to you now, but again, in the advice world, a lot of people just focus on the investments. And one thing that I say is a little bit confusing from your perspective is you can talk to folks from different firms, and you say, the women I'm talking to at these firms, they all have very nice work outfits on. They look very professional. The men all have 2 or 3 piece suits on with ties. They look very professional. But when you're working on your career path, again, I'm not patronizing the audience again, but you have above average skills, the students in this audience, and you're going to be a lot more selective. So you want to really try to think about, your unique personal set of skills and what type of firm you may match up with the best to try to get as close to your career path as you can off from the start. Again, we talked about the degrees, which Mike will get into more. The big picture again, in our field, Robert Morris is famous for its accounting program. What the CPA designation is in the accounting world, the CFP designation is in our world. So that's the #1 designation in personal financial services, especially if you're going to do anything in the planning genre. If you're going to do anything on the planning side, the CFP, Certified Financial Planner, which Mike is the CFP, he can talk about. The second most prestigious credential will be the Chartered Financial Consultant, which Mike is as well. And then the PFS, that's awarded by the AICPA. If you're a CPA and you pass the same type of exams and everything else, they award that. I'm a PFS, Personal Financial Specialist. So that's something that comes over time with your career path. And I think one thing that's nice about this, if you're working on, if you get into onto the right lane, so to speak, or the right highway with your career, and you start to develop this as far as putting a little bit of time into this sort of continuing education while you're working, you work towards some of these designations, you're going to make yourself a lot more marketable. You're going to be able to sleep at night a lot more. You're going to command more money in the workplace. I mean, it's just really a win-win. I mean, it's more time to develop a career. But again, working on, for example, a Certified Financial Planner designation is the same and is just as valuable if you think about you want to be a CPA, you want to work for an accounting firm regarding a CPA. In our field, we just want to give you an idea regarding sort of career path. So someone may come in, I think it makes more sense if we talk about the advisory team versus operations team. If you went to watch the Pittsburgh Steelers at a football practice, you'd say, okay, they're the Pittsburgh Steelers, that's the team. And if you stood there and watched, it wouldn't take very long to watch a Steeler. You say, I thought this was a team, but really, there was half the guys are doing this and they stick together all the time, and the other half the guys are doing this and they stick together all the time. And that's, of course, the offense and the defense. And it's the same thing within a firm such as ourselves. There's the advisory team, folks as myself and Mike, we have 7 wealth advisors. Then there's the operation team, the back office, the backstage as we refer to it. Again, everyone has skills which sort of fall on one side or the other. You could be equally successful on one side or the other. Sort of the career path, starting off as a client service advisor. A lot of times for a lot of firms, there may not be an immediate position open on the advisory team, but this is an individual who would start off in the operations team, and they have met with management, and there's been a mutual agreement that they're going to get on the conveyor belt to hopefully be an advisor at some point in time. I mean, there's actually more learning that goes on the operations team. I mean, that's when I started to practice 27 years ago. I did everything that a client service advisor would do, all the paperwork, the forms, dealing with the custodians, et cetera. Then you move into an associate wealth advisor position, then a lead wealth advisor, then a senior wealth advisor. Again, I talked about the commitment to continuing education. This is something that you'll be very successful with, working on continuing your life skills and your career skills, but also you want to get a feel for the organization that you're interviewing, and they're interviewing you. You have to remember you're interviewing them just as well. Again, you've got a lot of skills. Every person in this room is really, really, really good at something. So when you're interviewing a firm, they're interviewing you, you're interviewing them as well. You want to get an idea, what is their commitment to continuing education? Will they work with you? Will they help you be a better person? We spend a ton of money, I never say no, to anything regarding continuing education, workshops, seminars, anything that can make our team members better team members. And there's always the risk that someone could use that and they could sort of grow out of a position, or we may not be a good fit anymore. But you really want that kind of team, our team, if we would not have a good fit for them, and if it was better for them to go somewhere else for their personal career, I'm very happy for them. I mean, if that's the best thing for them, then I'm all about it. We're not looking to hold anybody back. With that, I'll hand it over to Mike for the presentation. And again, at the end, we'll have an open period for question and answer. Okay, thank you.
All right, thank you, PJ. So I've got about 20 minutes to try to run through a lot of information, and I'm not really going to attempt to condense anything that's more complicated than it needs to be into this presentation. If you get anything from what I'm speaking about today, I hope that I can convey that there is a lot of opportunity in the field of personal finance, financial advisory services in general. A lot of people that I talk to, when I tell them that I am a financial advisor, They usually tell me about someone they know who is also a financial advisor. And then they usually follow up by saying, I really have no idea what they do. And, one of the reasons for that is because financial advisors oftentimes have very distinct disciplines, very distinct specializations, and there's not a lot of crossover, even though they all typically tell people or advise people on what they should be doing with their money, how they should be looking at retirement. You can come from a lot of different angles. So I'm going to walk through with you how I got into the business was through the avenue of being a financial planner first. I didn't come from the tax side. PJ did, so his experience getting into the business was a lot different than even mine, even though we work together every day. What I wanted to run through here was, this is difficult to read, but I'll be able to explain it. But if you, upon graduation, if you decide that you have some interest in becoming a certified financial planner, I'll explain a little bit if you're studying taxation, if you're thinking about being a CPA, why that's a good thing. But if you're not, if you're studying economics or business management or something else and you're not really on that career path, that's okay too. That's perfectly fine. No matter which way you approach it, you can get to be where you want to be. When I left school, I started to study for the CFP. There are some securities exams, things like that you have to do in advance. But the CFP field of study, Certified Financial Planner, was the way that I went. And I think that's good because from there you can become a specialist. The CFP curriculum is a bit general in scope in that it just addresses a lot of different fields. PJ talked about 4 corners of the room, investment management, financial planning, estate planning, and taxation. You can't be the authority on all of those things. When I first got into the business, I thought, and I'll explain some of these things further, but I thought, well, I'm going to study the CFP first, then I'm going to be a CPA, then I'm going to be a CFA, I'm going to know everything about investments, and then maybe I'll be an estate planning attorney and I'll be able to do everything. That sounds ridiculous as I say it now, and it is ridiculous. It's a little bit unrealistic, but to become a specialist or specified in certain fields of work, whether it's insurance planning or what have you, I'm going to say that I think, in my recommendation, that's the way to go, and you'll be able to find your way if you get into the field of financial planning, just taking it day by day. You'll be able to see what you're a little bit better at, where your strengths and weaknesses are, and that's sort of how I've arrived where I am, and most people that I see in the business as well. When we talk about a certified financial planner, what is financial planning? I could only spend a couple minutes explaining that, but it's, in my opinion, it's so difficult to explain that it is best described as a process. You can't really summarize it in 1 or 2 sentences. So this is the process of financial planning. This is laid out by the CFP Board. They make the rules for everything that you have to do to be a CFP. They're pretty good about just rules and regulations, trying to keep people in line so that they offer arguably what is considered the best form of service categorized as financial planning. When we meet people, most of this is pretty straightforward, but the devil's in the details. You have to meet someone before you can work with them. You establish the relationship, you say who I am, and you learn about the client. Step 2 is you gather their data. Some things that go into this, a lot of it is heavy in taxation. You want to look at someone's tax return and things like that so you get the real truth of the matter. It very rarely ever happens, but sometimes we deal with clients and they lie to us about how much money they make and some things like that, and it's impossible to develop a plan for someone who's not honest with you. So that's part of the engagement. That's part of what we talk about up front, because we really do want to help and we need accurate information to help someone. So I'll get into that a little bit more, but once we receive the information, we analyze, we evaluate the plan, and then we start to develop some of our recommendations in step 4 here. And we talk to the client. This is usually a period of 2 to 3 meetings. This could last anywhere from 3 weeks if things are going really well. It could, some of these go into a year. Sometimes you meet with someone once or twice, and they're still a little bit unsure about things. You schedule a 3rd meeting, maybe a 4th meeting, before you really bring someone on as a client. But then step 5, we implement the recommendations, and we deliver the recommendations. We would say, we think your investments are maybe too concentrated in certain positions. We want to diversify. Maybe you're paying excessive fees and expenses, things like that. And once we get everything into our plan, we monitor the plan. And step 6, monitoring the plan. Say we meet with someone, we try to meet every 6 months with a client. Maybe it goes on to meeting once a year. But that's really the most important part of the plan, and it is the most difficult to describe, and it's also the most difficult to sell a client on its importance, because that's when the tax planning issues come up. Maybe only once every 10 years, that's when the estate planning issues come up, things like that. I have some specifics over here, but once again, getting back to the point of how difficult it is to succinctly describe what financial planning is, it's just different for everyone, and that's why the CFP gives you such a good background on sort of what to look for. And a lot of times, throughout my day and when I'm meeting with clients, certain clients, I have a lot of clients who are entrepreneurs, a few like real estate agents, and the way that they get paid, they're able to open a retirement account for themselves. They're able to save a lot of money in a way that someone who works for a large corporation who has a 401k cannot. That's really a one-off thing. I only have a handful of clients who can do that, but if you can, you're talking about serious tax savings and a lot of deferred investment savings, in the future. But there's just some examples over here. I don't expect you to read all of them. It doesn't matter, but a lot of what we do is, what PJ talked about. We need everyone's personal balance sheet who we work with. We do a lot of cash flow planning. That's really the foundation for the recommendations that we give. But going through this process here, one thing, and not to be overly critical, because I think the CFP is, a great way to go with your career, but I think they fall a little bit short in their assumption of what a CFP can do for someone, because, well, you can give advice on estate planning, tax planning, investment management. You might not necessarily be able to carry out your implementations. For example, if you're a CFP, that doesn't mean you can sign a tax return. That doesn't mean you can drop an estate plan for someone. That doesn't mean you can drop a will for someone. So honestly, before this process begins, many firms don't do this. We do. We work very closely with estate planning attorneys. We do not have one in-house. There are some complications with that. You can do it. Some great firms do it. But honestly, before you start talking about investments and financial planning, do you have a will? What's going to happen to your stuff if you pass away? Do you really want the government to decide? If you don't have documents associated with your assets, honestly, I think everyone should have a will. If you're even 30 years old, maybe 25 years old, if you own things that matter to you, you should probably take a look at that. And then there's, healthcare directives. Some people we meet right away, we know that they need a trust just because of certain circumstances. We cannot draw that trust up for them. We would, work with an estate planning attorney to achieve that. So, that's something that the CFP Board doesn't really tell you, is that estate planning meeting, that might be of the utmost importance before you can do any financial planning or investment recommendation. So that's just something to give consideration. If you ever do find yourself, and it's unlikely, but if you ever do find yourself having gone through law school and you say, well, I still want to work with people in a personal finance capacity, even maybe carries over into their investments, estate planning, there's a lot of opportunity there. It's just a little bit of a difficult field to get into and find your niche, but if you do, there's a lot of opportunity there. And I just have up here, and this is a recurring theme, but just the CPA, the accountant, how much value they can add to the financial planning process. I could stand up here and talk for about 5 hours. It would be a pretty boring discussion, but it's just, even who is preparing the tax return is the most trusted individual by our clients. They trust them more than they trust us. I can't prepare a tax return. I'm not a CPA. There's enrolled agents, some other things you can get into, but that's where the trust lies, and very few people report inaccurate information on their taxes on purpose, knowingly. People are usually pretty honest. People have in general, kind of a fear of the IRS. They don't want to have to owe penalties and things like that. So we have accountants on staff. We have CPAs on staff. They really get to the heart of matters, and I've got this on here 3 times because throughout this process of our financial planning recommendations, usually when you meet someone, if they saved a lot of money, they've got some money in what we call after-tax investments. It's outside of a 401k or a tax-deferred vehicle. By the time we meet them, if they've saved up a lot of money, they might be in their 50s, 60s, 70s, or older. They've probably got some assets that have appreciated a lot. Well, how do we sell those and get that diversified? That's something we run into a lot, probably every other week. So that's something that an accountant's going to be able to take care of. a lot of people who do not have a background in accountancy related issues, they really shy away from that. They don't really have a lot of confidence in the recommendations that they give. You hear it from a lot of financial advisors, people who we meet who we haven't known before, or I've been in meetings with people, they say, well, you have to ask your accountant that. You have to ask your estate planning attorney that. So they'll give you a little bit of advice, but I don't really want to take that on. And that's where you can create a lot of value by specializing in something. I mean, if you really do own that, if you really are confident in your recommendations as a tax planner, you can give meaningful advice to someone every year, because these things come up every year. On the bottom here, I've got some better examples, but some more advanced planning items are, Roth conversions. It's not something I'll explain too much up here, but there's an opportunity potentially to convert some money into a vehicle that was tax deferred into pay taxes once, move it into a Roth IRA, and then it grows tax-free from there on through the rest of your life. And there's a lot of estate planning benefits to that, whereas someone could inherit that money. That's even something where, I know you're all younger here, but if your parents are doing that, you'll benefit greatly from it. If it's a good recommendation. But tax loss harvesting, income smoothing, things, how to get in and out of investments, it's heavy on the tax side. So, if you are working through a career path, as you're thinking you want to be an accountant, I would strongly urge you to continue on that path if that's what you enjoy, because I've seen a lot of successful advisors. Some of the best financial advisors I know started off on the tax side, and then they said, well, we want to manage investments as well. And they were able to become skilled in that field as well. But that just gives you a lot of confidence when talking with clients. I think probably, in my opinion, what clients want to talk about with us is the investments. We do the investment management. If you do go through the CFP as a certified financial planner, it's I would say investment. It's not overly weighted toward investments in the field of study, but you study enough about investments that if you're working with a traditional couple or what have you, people who have issues that are generally, there's some crossover between the first couple you meet, the next couple, or what have you, nothing outside of the box. You're going to know enough about investments to be able to give them sound advice to help them achieve their retirement goals. So people, when they come to see us, they really want to talk about investments. They really need to talk about taxation and some estate planning issues every once in a while when they come up. Investments are fun to talk about, and that's something that I'll address here, but there's two more professions that I put up here, and one is, I know when I was in school, when I was undergrad at Duquesne, people talked a lot about the CFA and financial analyst. That's sort of like, as competitive people, which most everyone I know has got some type of competitive spirit to them. The CFA in financial advisory feels like kind of the gold standard, and it is for investment management. But I would just like to express to you that it is completely different than anything that you see in personal finance, how you could benefit from having studied the CFA. It's a series of 3 exams. I think the pass-fail rate, I think it's 40% of people on average pass the first exam. It's very difficult. If you enjoy that type of study and you enjoy that type of work, you're probably looking to maybe work for a mutual fund company or something in the future. If you turn on CNBC and you look at all the big financial companies, they all hire CFAs, and a lot of those people have tremendous careers. The only thing I would urge and stress to you is that there aren't a lot of CFAs that sit down across the conference room table with a couple and talk about retirement. They talk about investments, if they talk about anything at all, but typically it's more of an institutional environment where you're not working with the general public. And there's a lot of opportunity in that field as well. But the only emphasis I would like to stress related to that is it's different than the CFP. It's very different than the CFP. But if you enjoy it and that's what you want to do, you should do it, because there is a lot of opportunity there as well. And then the subject that I've probably discussed the least, but it's also very important, is risk management, another term for insurance. You'll see that a lot now, as described as risk management, because a lot of insurance is protecting anything from catastrophic to just downside risk. Insurance plays a large role in estate planning, and really just generally the financial plan overall. Everybody needs insurance of some kind. If you own a car, you need auto insurance, health insurance, things like that, that we don't think about all the time. But some people need portfolio insurance, so to speak, and I won't get too deeply into that, but everybody's different, and everybody feels differently about investments. And I know when I was younger getting into this business, I just assumed, well, everybody, feels okay about the stock market. You put your money in stocks, you invest for 35 years, and then you retire, and it is what it is. But people feel very, very differently about the stock market than you would think. And once you speak to them, on a personal level, if you do get into this business, you'll see that. And some people just aren't suited to ever have money invested in the stock market in their life. I would say it's a minority of people. Things get a little bit more messy when someone doesn't understand what they're invested in and things like that. And I won't get too caught up on that, but like I said from the start, if I could just emphasize something to you, it's that all these different fields, whether it's the CFP, which is, I don't want to call it the generalist because it is specific information that you're studying, but amongst these other areas of studying, estate planning, the CPA for taxes, insurance planning, investment management, these types of professionals typically think and act differently. They have different strengths and weaknesses, and in my opinion, that's why it all works so well, cohesively. If you do get into the field of financial planning, you'll be able to feel your way around, and that's something that no one can tell you what the best job is for you to take out of school. If you're lucky enough to have the opportunity to get multiple job offers, then sometimes options create some unique issues in themselves. But if anyone has any questions for me personally, if you come up to me, if you say, well, I got to go to class, I know you're all busy, I'll give you my card, you can email me. I have really no conflict in giving you advice because I can't give you a job. I can't do anything other than give you feedback on my personal experience. Some of the most qualified people who I know personally, just kind of to give you the negative spin on things, is a lot of them got into professions that didn't really meet with their skill set. I know a girl who was, I don't want to give too many specifics, but she was in a financial planning contest through CFP undergrad, and her team won and everything. So through the eyes of registered investment advisory firms, she would have been theoretically the most qualified person to work for a financial advisory firm. And she took a job with a commission-based firm that was very, very competitive and very numbers-oriented. You have to meet your goals and your numbers, and it wasn't really a good fit. And I would just hate to see, any of you get in that situation where you're really just turned off by the whole business because of, one experience that, throughout the grand scheme of things throughout your life, it's just, maybe it lasted for a year or what have you. It's not necessarily indicative of the entire experience. So there are good jobs, there are bad jobs, but, I just hope that you all get into a good fit if you're looking to get into this career path. Whatever I can do to help, I'm willing to do so. And I mean that if you want to email me or whatever, we'll stick around for a little bit after this, but we'll take questions now too. So just anything in general is welcome. That's it. So thank you.